Green bonds, investing in environmental sustainability. Presentation overview. Green bonds definition and workings. Green bonds are a type of fixed income security used to fund environmentally beneficial projects. The key points will cover the definition of green bonds and how they work. History of green bonds. The history of green bonds will be covered in this key point, starting from their inception to their current use in the market. Benefits of green bonds. This key point will delve into the benefits of green bonds, including their environmental, social, and financial advantages, and take a closer look at the current market. Definition of green bonds. Green bonds are debt instruments used to finance environmentally friendly projects such as renewable energy, sustainable infrastructure, and clean transportation. Types of green bonds. There are several types of green bonds that exist, including the use of proceeds, revenue, and project finance bonds. Each type has its own set of rules and eligibility criteria. What are green bonds? Green bonds, introduction. Green bonds are a type of bond that are used to finance environmentally friendly projects. Unlike regular bonds, the proceeds from green bonds are used exclusively for these projects. Green bond market. The green bond market has grown significantly in the past few years, thanks to increased awareness of environmental issues and the need for sustainable finance. The market includes a variety of bond types, such as corporate bonds, municipal bonds, and government bonds. Environmental friendly projects. Green bonds can be used to finance a variety of environmentally friendly projects, including renewable energy, energy efficiency, sustainable transportation, and more. These projects protect the environment and promote sustainability. How do green bonds work? Green bonds as loans. Green bonds work like regular bonds, where the issuer borrows money from investors and promises to pay back the principal plus interest. Positive environmental impact. The difference between green bonds and regular bonds is that the funds raised from green bonds are used for green projects that have a positive impact on the environment, such as renewable energy, sustainable agriculture, and clean transportation. Environmental, social, and financial objectives. Investors can choose to invest in green bonds based on their environmental, social, and financial objectives. Green bonds provide a way for investors to align their investment goals with their values. Types of green bonds. Green bonds are of three types: green use of proceeds bonds, green project bonds, and green securitized bonds. Green use of proceeds bonds are used to finance specific environmentally friendly projects, whereas green project bonds are used to finance a larger project. Green securitized bonds are backed by a pool of green assets. The history of green bonds. Early days of green bonds. Green bonds started as a niche financial instrument with small issuances by development banks, but gained traction in the late 2000s as investors became more aware of the environmental impact of their investments. Green bond standards and guidelines. As green bonds became more popular, standardization and guidelines were introduced to ensure transparency, accountability, and credibility in the market. The Green Bond Principles and Climate Bonds Standard are two examples of such guidelines. Current use of green bonds. Today, green bonds are widely used as a mainstream financing tool by corporations, municipalities, and governments to fund environmentally sustainable projects, from renewable energy to clean transportation. The first green bond. Introduction of green bonds. The first green bond was introduced by the European Investment Bank in 2007. It was aimed at financing renewable energy and energy efficiency projects and laid the foundation for sustainable finance. Purpose and benefits of green bonds. Green bonds are an innovative financial tool that offer low risk investment opportunities and help finance sustainable projects and initiatives. Green bonds in the present day. Green bonds overview. Green bonds are fixed income securities issued by corporations, governments, and municipalities to finance environmentally sustainable projects. They have gained popularity in recent years. Green bond market growth. The global green bond market is well over $500 billion, driven by increasing investor demand for sustainable investments and a growing focus on climate change. The benefits and current markets for green bonds. Environmental benefits. Green bonds offer a range of environmental benefits, including funding for sustainable energy projects, green buildings, and renewable energy resources, which help reduce carbon emission and promote a cleaner environment. Social benefits. Green bonds offer a range of social benefits, including job creation in the clean energy sector and access to affordable and clean energy, which can help improve the quality of life for people in communities worldwide. Financial benefits. Green bonds offer a range of financial benefits, including diversification of investment portfolios, improved access to capital, and potential for long-term stable returns, which can help investors achieve their financial objectives while promoting sustainable development. Environmental benefits. Green bonds. Green bonds are a form of fixed income securities that finance projects designed to be environmentally friendly, such as renewable energy and energy efficiency projects. Environmental impact. Green bonds help to reduce greenhouse gas emissions, protect natural resources, and promote sustainable development, which provides environmental benefits to society. Social benefits, access to clean water. Green bond projects help improve access to clean water for local communities, providing a sustainable source of drinking water and improving public health. Job creation. Green bond projects can create new jobs and promote economic growth in local communities, providing opportunities for people to improve their standard of living. Sustainable agriculture. Green bond projects can promote sustainable agricultural practices, helping farmers to grow crops in a way that is environmentally friendly and economically sustainable. Investor benefits, diversification. Investing in green bonds can offer diversification benefits to investors by allowing them to invest in a range of projects across different sectors and geographies. Risk reduction. Green bonds can reduce risk for investors by offering them exposure to projects that are designed to mitigate climate change and promote sustainability. Potential for higher returns. Green bonds can offer potential for higher returns to investors by providing access to a growing market with strong demand and low supply. Alignment with values. Green bonds can provide a way for investors to align their investments with their values by supporting projects that promote sustainability and address climate change. Current market trends. The global green bond market has experienced significant growth in recent years, with issuances increasing in both developed and developing countries, offering sustainable investment options. Conclusion. Green bonds offer a way for investors to support sustainable projects and contribute to a more sustainable future. The market for green bonds is growing rapidly, and with the rise of sustainable finance, they are poised to play an increasingly important role in financing the transition to a low carbon economy. Thank you.